Morning all, how are we doing? Happy Wednesday. How is everybody? Morning Ian, Kennelly, Gregors, Danny, Wayne, JC, Figini, Peter, how are we doing? Just having a look at this Aussie New Zealand. Gone mad. This isn't actually any 175 ADR hit on the Aussie New Zealand. I don't know what your dashboard says, but if you look at the size of this broker candle overnight, we had a huge slippage from yesterday's close all the way down to there, that candle wick. So half an ADR, just over half an ADR of that 175 ADR is broker swap. So it's still an ADR hit, but it's more like 125 stroke 100 rather than 175. So it's not actually as aggressive as it looks. The actual move is that, which is 68 pips, 56 is ADR. So, but it is extended. The New Zealand dollars sold off quite hard overnight, basically. So big move down on the New Zealand dollar. I was just scanning through the news. I can't really see any reason for this. Overnight, we had the... Oh, no, we didn't. That was yesterday, Bullock. Yeah, no, it's Bullock yesterday, wasn't it? So yeah, don't really know why that's sold off. Just New Zealand dollar just having a bad day. We've had GDP this morning for the pound. That came out as a negative. It was forecast to be a negative. We got a worse result than expected on the GDP figure. Unlikely the market will make any dramatic move today. It's obviously dropping because it's bad news. But I'm not really sure we're going to have a huge drop because tomorrow we've got the interest rate announcement. So the market's not going to want to just suddenly move because GDP's dropped. It wants to know what's going on with the interest rates. So, and more importantly, what the votes are for the interest rates moving forward and the future guidance for monetary policy. So we are having a drop on the New Zealand dollar, on the pound today. Pound New Zealand, obviously, is probably going to be the most affected because that New Zealand dollar is likely to pull back. So if this pound continues to drop this morning and that New Zealand dollar pulls back on this extension, this is going to come down twice as fast. So if you do want to short anything pound on the back of that news, pound New Zealand's probably your best bet. The other ADR we've got, obviously, is pound New Zealand. So that's ADR. Pound rallying against New Zealand dollar, obviously, because New Zealand dollar's been dropping. So those are your ADRs this morning. There's no other overnight news that I could see of any impact. There's bits and pieces of yen, but nothing really exciting. So nothing overnight. Morning, everybody else. Not sure where I got to. Brian, Yotko, Monkey, Martin, later on, how we doing? So news today. Morning, Weird Dad. I'm never going to get used to saying that one. So today is FOMC. So today we've got PPI this afternoon. We did get a little bit of movement off the CPI numbers yesterday on the US. Not massive, but we did get a couple of hours of rally. So the entire move from top to bottom yesterday was just about an ADR, so nothing particularly dramatic. As you can see, for most of the currencies, we didn't really do an awful lot off the news of the CPI figure, the inflation. PMI is basically the kind of the manufacturing, if you like, version of CPI, the Producer Price Index. So we will get a movement off of it, but probably not going to be anything dramatic because the market isn't going to want to move until FOMC. So today is a high impact FOMC. There's two types of FOMC, the FOMC without the press conference and the FOMC with the press conference, which is what we've got today. So interest rates expected to be 5.5, will be 5.5. It's going to be catastrophic if it's not. There's absolutely no reason the Fed would change it at the moment. So what we're interested in is the press conference. So the market will actually start its move usually around about 8 o'clock after the press conference. So you get a whipsaw at FOMC, Press conference will then be held. That will give us indication as to future guidance, either during the press conference or at the end of the press conference. The market normally makes its move. So that's today. We've got GDP for the New Zealand dollar overnight as well. So today we will probably see rotational day while we're waiting for FOMC. So I'm not expecting massive moves today. But you never know. So that's what we've got coming up news-wise. Market's about to open. DAX just basically at the close. So not gone anywhere really. So if you look at yesterday, we closed there, we opened there. So we had a down day on the DAX, which is unusual. If you look at the NASDAQ, yesterday we had a bullish day. S&P, bullish. Dow, bullish. So again, broke out highs again on the US indices. However, the DAX hasn't. So we'll see where we go today. We're waiting for this DAX to drop after this insane rally. So as you can see, we've had a reversal alert on the hourly, and this is the retest. So potentially this is the start of a rollover, potentially. We'll see what happens today. But yeah, so that is possibly going to start a move back down to the downside. So your targets today, looks like we're trying to go long at the open. Targets today really is going to be yesterday's high, which is basically where we opened. So the open of yesterday and yesterday's high. We've got this area as well, which is the previous day's high, which we kind of tapped into a little bit and rejected multiple times. It was a bit uneven, but it is an area we weren't willing to go through. So we've got this area here as well that we didn't really want to push above. So the market had a lot of downside pressure on it yesterday from there, from somewhere around there, and obviously yesterday's high. So there's a couple of spots basically on the way up, if it goes up, that we're likely to find sellers. Downside, easy, yesterday's low, previous day's low, and then a catastrophic drop down to ADR. So there's loads of room. But it's FOMC day, so we'll see if we get any movement. So far inside the 15-minute, the pre-market opening range, pre-market range. So you can see those levels very clearly on this chart, obviously. There's the high of yesterday. There is the high of the previous day that we rejected. And then we got this little level here where we kind of just pushed up and kind of didn't want to go through either. So the selling pressure kind of moving down the chart. So if we do break to the upside, it might not get very far. If you look at yesterday's high is only 2R. So there's not a lot of, if it breaks to the upside, you don't really want to try and challenge yesterday's high or much more than that, I don't think. It'd be much better to get a downside break today because you've got a lot more room to move. If we break yesterday's low, obviously it's a kind of a lookout below scenario, because if this is the start of that rollover, could be a big down day. But it's FOMC. So not really convinced we're going to get an awful lot of volume. The market is really slowing down at the moment. As we know, it's been very tough last couple of days. Morning, Outro. Morning, Peggy. Morning, Amy. Who was it in here saying they have just purchased a course with WB Trading? That was Ryan, I think. I don't think they just purchased it. I think they'd bought it before. Long on the DAX. I took a look at their YouTube and it looks like an interesting approach. Yeah, don't know. I'm always interested in looking at people's strategies, especially if they're mechanical, because I like to prove them wrong. But I messaged someone on Telegram yesterday, Ryan. I thought it was you. I did send you a message on Telegram yesterday. If it's not you, it's a different Ryan. So, anyway, but yeah, I much prefer not to disprove a strategy. Obviously, it would be lovely to get a mechanical strategy, test it, and go fast, trade it. But that's not been my experience. So, yeah, we'll find out. Well, I don't know. I won't find out. I'm not. I've got enough to do. I've got my own stuff on the bubble, but always worth looking at strategies. All strategies work. All strategies fail. If it's got an edge long term, it's worth trading at the end of the day. So, I'm not the only one that makes money in this industry. However, I'm always skeptical when people are selling their courses rather than just doing it. So that's the only reason alarm bells ring. Okay, upside target just moving down into yesterday's high. I'm going to be uber cautious today. I'm going 1.5 hour as my target to the upside, just because we've got that bit there, we got that wick there, and if I put my TP there and it does that, I'm going to be cross. So I'd rather just get out with a little bit of profit this morning if we are going long, which it looks like we're trying to, because I've got no faith in this breaking to the upside today. But go with momentum. Momentum's going long. Okay, just running into this area from yesterday. So we'll see if that doesn't look very resistive at the moment. Got a little bit of a gap up there as well. US indices breaking long as well. We're trying to. Let's see. Hopefully we get some momentum. We had nothing yesterday. All we got yesterday was the open. We went short yesterday. Obviously, that's all the market could muster. And then we sat there literally for 40 minutes doing nothing. So nice to get a break today. US indices yesterday, for those that weren't in the live room, nice result yesterday on the US indices. Good breaks to the upside. Good breaks to the downside. All of them. Targets hit everywhere. So nice and easy one yesterday. Didn't get a run, but got a nice easy target break, which was nice. Okay, so that's the previous day's high we've just tapped into there. Is this level here where we basically stopped on Monday and immediately sold. Quite hard. Yeah, don't want to go for that level, does it? Give that another 5 minutes. Morning, Neo. Looking forward to your new live room format next year. Accounts and different strategies. Yeah. If you stick with me long enough, as people that have been here for a year or so will probably attest to, I say a lot, but I don't always do it. I have a lot of plans. The trouble is, I never have time to execute them. I would love to do what I want to do next year, but what I need is somebody to write about 25 hours worth of content for me, and I haven't got the time to do it. So the education side of things might still be a bit ad hoc, but yeah. I'm getting all my accounts together for the different strategies that I'm going to trade next year. Not going to be much different to what I'm doing at the moment, to be honest. It's still going to revolve around indices and position trading, the vast majority. But I want to go live with hedging. Morning, Edward. But I'm only going to do that if I can get it working as I want it working. I basically need an EA to automate it because I'm not going to do it manually. So I'm working on an EA at the moment to automate the entries and the exit criteria, but I will be manually managing all of the trades that do not work out. Exactly the same as position trading. Basically, this same strategy with hedging. If I get into a trade and it works out, it takes profit. If it doesn't, it hedges. That hedge will then get exited. When that second hedge tries to exit, if it doesn't, that's when I take over and get manually involved. I can't build. I've tried to build into the EA an automated hedging exit mechanism. Can't do it. There isn't a way that works. You have to do it manually. You have to be the trader, basically, at the end of the day. So I'm just building my product, basically, to, well, my EA to do it as much as possible, basically, because I don't want to be sitting in front of the charts all day. I'm just adjusting trades over there. I'm just getting out of this DAX. I don't like it. God, give me the order. I don't like that rejection. It's just the fact that it's gone straight into that previous day's high. As soon as we opened yesterday, we tried to sell off. But buyers tried to take control. Sellers took control. Buyers had another crack. Sellers took control. Buyers had another crack. Sellers took control. This looks to me like this is all the peak formation high of this move. The markets tried to go long this morning and immediately hit a load of sell orders. It might go, but after yesterday, this DAX is so slow at the moment. What I don't want to be doing is sitting in a hedge. I think you'll find it very difficult to get out of hedges at the moment. The market's got no volume and it's FOMC day. I do not want to sit through the whole morning. I've got so much to do this morning. I just don't want to sit through the whole morning of waiting for the DAX to move. So I've just taken the decision to exit this morning. I just don't like the price action. It might be completely wrong. Obviously, there's still a 50-50 shot. It's going to go up or down. I don't know where it's going. I just don't like that at that level, which is there. Again, the fact that we had a down day yesterday on the DAX, we've had down days on the DAX during this run, obviously, and they all were part of a continuation. It was a micro flag. Yeah. And then it continued. It's just that we've had an entire month and a half now of nothing but buying. Just have no faith in going long. Just this close to Christmas with this light liquidity that we've got at the moment, the market trying to go long after this much of a rally, I just get the feeling the banks are going to want to flush this at some point and get out of this before Christmas. And when it goes, I just think it's going to collapse. It's just going to drop like multiple ADRs in a number of days, because everybody that sees this move starting is going to jump on it. I'm just uber cautious about longs at the minute. So I'm not going to take a short on it right now. If this flies through this low, I might look for a pullback to jump in short. But it'll be a stop loss based trade, and I'm not going to do it on this account because this is the stock index hedge account, so I'm not going to do it on here. But I might take a manual on my other account if this decides to drop. But I want to see some volume coming in. I want to see that, and then I'll get in when it comes back and retest some propulsion moves. Just doesn't after a day like that, it just doesn't look long. Doesn't look long at all, but it might do. But that's me. If you want to stay in it, stay in it. Yeah, still you can still hedge it. The thing that worries me is because it's FOMC day doing that, I just get the feeling it might be tricky to get out on a decent move because you're not going to get much more than a couple of R. Look at yesterday. Look at where we are today. with our pre-market range and our 5-minute open. Look at where 2R is, and then look at yesterday's entire movement. That's it. That's all you're going to get, 40 to 50% of ADR, especially ahead of FOMC. This thing will move with the US indices later, but just not really got much faith in it this morning. So I'm jumping ship, but if you want to stay in, stay in. Right, ADRs we've done this morning, Aussie, New Zealand. That's pushed up into the highs. We've got a nice big propulsion move here, which we've sold out of multiple times now. We're coming up to retest this area, and it's lovely extension. This isn't, as I said earlier, it's not a 175 ADR. This is a broker candle. This is them at the swap, widening the spread to take out everybody that's longed this in the last 4 days. If you went long in the last 4 days, where's your stop? There. What did they do this morning? Push that candle down to there. Yeah, you're out. You're dead. If you've moved your stop from where you got in up to break even at any point or lock in any profit, you're out. So we've just pushed up into that high, which is roughly 125 ADR. So it's still a good looking short opportunity from there. You've got a couple of good resistance levels coming up for second entries if you want, which on this chart is going to be somewhere in the region of sort of 200 ADR. So we've had a reversal alert on this morning, which has already, I think, was already invalidated. Yeah. So you would have got in your first reversal alert on this was there. So that candle there would have been your first reversal alert this morning. And then it pushed up ever so slightly again and gave you a second alert at exactly the same spot. It's just pushed up ever so slightly again. Now you've got a new reversal alert going in there. So basically the entries were there, and you're going to get another one there. So lovely push back down into that propulsion move potentially today. But you've also got resistance coming up, multiple resistances coming up here. Sorry, somebody posting in Telegram. Oh, that's you two talking, is it? Right, okay. So yeah, watch this level. So that level potentially is a nice bounce point, but I would be happy today if you're going to get in there, scale into a second somewhere up here. By the time you get up to there, you're really 150 ADR, and then try and play a nice little pullback. So it's kind of a multiple entry scalp type play today on Aussie New Zealand. Other than that, pound New Zealand is the only other one we've got, which has reacted very, very nicely at resistance. Again, you know, support resistance. This is, I keep going on about it, but it is something that does work over and over and over again. So that one's a nice bounce. You've already had that. You've already played it. You should be in profit on it at the moment. Difficult entry, actually, because the size of that bounce move, that was your entry all the way down there. So you kind of missed all that because it was such a big candle. Just coming up to retest at the moment. So watch that propulsion gap for a second entry if you want it. That will be kind of the second leg, big legs, but second leg of the reversal. Right. RSIs, we've got a couple. I'm not in trading anything at the moment. EA's turned off until the new year now. There's two extensions we've got at the moment. Euro New Zealand, which is extended on the upside 70 ADR, RSI. Almost up at the 75 level. We got this propulsion gap, which is not very clean, the accumulation before it, but it was a big sell and it has been added into twice. So there's likelihood we're going to find resistance there. Nice little flag move. So that entire move requires a profit take at some point. So good looking potential entry there as well. So drop down 5 minute. There's Ryan. Yeah. So I did send the right message to the right Ryan yesterday. That's good. So there's so many different people with different names. I never know if I'm contacting the right person in Telegram. Right, UN New Zealand is extended on the RSI, obviously. So you've just had your reversal on that and your retest. There we go. So potential drop on that one there. We've also got New Zealand dollar Swiss. That's extended to the downside. We've just broken out of range on this one. We've been stuck in this for absolutely ages now. So you can see we've got this is a 2-week low. We've got last week's low. That's last week's high. So this is basically the range. We've just broken out to the downside. So you're looking for support to the downside on this one. We're just about extended. This is either a move akin to that, where it's basically just a false breakout, price discovery failure basically, which this could well also be, or it is a breakout and we're going to start to trend down into the next level of support, which is going to be roughly about 175. So you could get into a first entry here, look for a push back up into propulsion, assume that this is going to be a breakout. If it's not, brilliant, you got profit. If it fails and pushes down, you'll be scaling in, and that's about where you want to get your second entry on down there, and then wait for the profit take on that move to get out when they come back and retest that support, which will turn to resistance. So those are your only RSI extensions. There's no other RSI extensions to look at all. That's it for today. Literally nothing else. We're waiting for FOMC. So you're not going to get any real movement until FOMC kicks in. Chrome has just updated. I just realized it's stuff's kind of moved. Yeah, that's about right. I've done an update to Chrome and everything's gone rounded corners. I'm not convinced. I'm not sure I like rounded tabs. Doesn't feel right. I just have to get used to it, but this feels a bit weird having rounded edges on everything. Anyway, it's just me. Let's have a quick look at the DAX. Propulsion is holding at the moment, so we're kind of stuck between a rock and a hard place again. It's just looking like yesterday, and I think this year's over, to be honest. I'm going to carry on trading this week, but I'm going, like today, I'm going to be so uber cautious. Any price, I just basically want the market to either go and do it, or if you're not going to do it out the box, I'm not interested, because the problem with this kind of liquidity and this speed of movement that we've got currently is you will be sitting in this all day waiting for price to get somewhere that you can do something with it. So it just sucks your entire day, basically. That's not the idea of this strategy. It's a momentum breakout strategy. There's no momentum, there's no breakout, there's no point in trading it, is there? It only works when there's volume. There is no volume. So I'm not really interested unless we're going anywhere. It's very difficult to make money when the market's not moving. So we'll see where we go, but that does look like an upside rejection today. So it looks more short than long right now, but you know, you got two massive wicks there. The sellers aren't able to make any progress either. Buyers aren't getting anywhere, sellers aren't getting anywhere. If there's no one getting anywhere, you're literally just going to get whipsawed around all day. So on to park for the morning, I think, probably. And we'll come back and have a look at it this afternoon and see if we can get some movement out of the US. The problem this afternoon, obviously, is 1:30. We've got the PPI figures. So if we do get a big movement out of that and we get ADRs hit, we might have a bit of a tricky US session this afternoon, but that's the key focus for today. So like yesterday, we might get a nice big dump of orders at the open, which will get us to target, and then basically pull back from there. So we'll see what happens. But yeah, that's really it for this morning. So waiting for the news. I'll be back at 2:20 this afternoon. We'll obviously trade the US session and see if we can get something out of that this afternoon, but a bit tricky at the minute. Not an awful lot of volume around. So US market's not really doing an awful lot today. As you can see, the NASDAQ's coming down. The S&P's not going anywhere. The Dow's trying to go up, but nothing happening, is there? FOMC day. Anybody got any other pairs they want to look at specifically today? Because there's nothing much else happening, and I doubt anything will happen. So I'm still in my Euro CAD. I'm hoping now we've got this market structure reversal in, i.e. we've broken that high. This is the retest, next leg up. So I'm looking for that high to get invalidated today, or that high, or that high. There's ADR. So basically my target today on this is ADR, which is that propulsion gap. I'm pretty sure I'm not going to hold it to ADR, but if we can get a decent move on this euro today and get any kind of volume coming through, I'll be out of this today. So what I'm worried about, though, is this descending channel that we've got holding, and this is just kind of a little bit of a blip outside of it, but it does look like a good structure break to me. Just needs a bit of buyers to come in. So obviously FOMC this evening could well move this completely the opposite direction. So one of those two things is going to happen at FOMC. The US dollar is going to rally or dump, and that is going to move the Canadian dollar. It could well just be a whipsaw. So I really want to be out of this by FOMC this evening, if possible. But we'll see. Oil yesterday had a complete dump, and we've made a new low, which is not going to help the Canadian dollar, which is great because I'm long the euro, short the CAD on Euro CAD. So this, as far as I'm concerned, you keep dropping. But if we look at where we are with oil now, like I said earlier this week, this is the level that they are not letting oil through this year. 67.25. 67.25 a barrel is not what they are looking to drop below. OPEC have come out and said that they are supporting price between $70 to $80 a barrel as the norm now. Yeah. So there's your range for where we should be trading moving forward until something changes. So this is an absolutely beautiful bounce point for a long position. As you can see, that's exactly what's happened multiple times this year, and we're getting back down to it again. So it broke that low from last week yesterday immediately, and it didn't just break it, it collapsed through it. This afternoon at 3:30, we've got oil inventories. So when those oil inventories are released at 3:30 this afternoon, we're going to get a new move started on oil. So that basically 3:30 this afternoon could well be the catalyst. If we can drop down to that support, that could be the catalyst to get that rally underway this afternoon. So, you know, if you do want to get involved with oil, it's a critical level that we're approaching now, and we are so close to it. We're literally 8 pips away. Yeah, quarter of an ADR away from that annual support. There is a level below it, which is this orange line I've got at 150 ADR. So if we get somewhere around here by 3:30 and you want to enter a long position, make sure your stop is way below that level, because if that oil inventory tanks it, it's going to look for somewhere for buyers to step in and defend that position, which is going to be this low, somewhere around 150 ADR, 175 ADR. If it collapses down through this by the time we get to 3:30 this afternoon, even better. We've got this entire move here, which we haven't really pulled back on yet. And for me, we've got this entire move here, which we really haven't pulled back on, like not proper, you know, a pullback, proper pullback. We haven't had one yet. We just kind of flagged and we accumulated for a bit. Yeah, it's not really come back and profit taken that leg, is it? So superb level to start looking at it. And, you know, it's one of those, if you can hold it for 2 or 3 weeks and into January even, you could be looking at a huge profit on it. However, the question is why? is this dropping? OPEC is worried. What's going on with oil, everybody? We've got things like the COP summit, which is just finishing now. And the Saudis are not interested in saving the planet. They're interested in oil. Yeah. And it's one of those things that is demand is dropping because we're going electric and hydrogen in other countries. So the demand is dropping. However, short-term demand is still going up, although long-term demand is forecast to drop. So it could be that we look at oil and go, right, well, yeah, we don't need it as much, therefore we're not going to give you as much money for it because we've got other things to do. And it could be that we start an overall decline, and year on year we just start to dribble away. But you've got to look at these levels and say, all right, well, at the moment, no, that's what we're buying. And OPEC have said they want it 70 to 80. We're below 70. Should go up. So it's just a really, really good technical level. And we've got a fundamental at 330 that could be the catalyst to move it. So we'll see. Euro New Zealand's just hit ADR as well. Thanks for the follow, Dennis. Welcome aboard. Euro New Zealand pushing up. Hopefully this is Euro pushing. No, this looks like New Zealand dropping further. Yeah, New Zealand dollars still falling out of bed. So Euro New Zealand ADR hit to the upside. Again, pull back on this leg. Look. So we've gone into an accumulation. Now we're pulling back on this leg. So watching resistance to the upside, somewhere around that area. Top of that propulsion gap potentially is the maximum upside on it. So we're getting extended. You're probably going to get an RSI alert on this if it carries on going above 125 ADR. So looking for reversal alert on the 5-minute. Just wait for the structure to break to the downside and then see if you can get in on a short on it. Again, support. Never accurate. Yeah, that was the previous level we bought from. We tipped down below it. We didn't quite get to it this time. We kind of bounced out of it, bounced out, but they're basically buying this area and they will buy it up to somewhere around that area. Somewhere. Nothing is ever exact. But yeah, so nice little push up. So if this just basically is kind of a flag or a price discovery, which is going to fail, it's going to come back into that range. If it is going to continue to push up, you can get in one, take a second entry there, second, third, somewhere around that. If we're pushing all the way up to there without a profit take, you get out on the leg down. There we go. We just catch up on chat. Ryan, you have to respond to me as well. Don't forget my DM. Don't start talking to Outro and ignore me. From experience, how many trades would you have in a position to call it a squeeze? It's not number of trades. It's percentage of drawdown is what I look at as a squeeze. My account getting squeezed. The market is pushing and squeezing. How many positions you have on is determined by how the market makes that move. So if you get into a short, let's look at this one as an example while I'm in it. So if you get into this one here, yeah, as a first entry, and then it pushes down, my second entry is 72 pips. 96 is an ADR. So that's roughly 3/4 of an ADR. Luckily, we got a reversal alert there. Now, if this had pushed down and then just done that and then pushed all the way down to there before it gave a reversal alert, I would have a position there and a position there, and I wouldn't have that one on. If the market structure didn't shift and it looked like the buyers were coming back to try and take control, I wouldn't get a trade on. So in that case, my trades would be 153 pips apart. 96 is ADR. So that's roughly 150 ADR between entries instead of 75% of ADR between entries. So it's not number of positions. The number of positions is determined by how the market moves up and down. It's the percentage, the distance it's gone. If something moves 4 or 5 ADR against you without giving you a pullback, I'd class that as a squeeze, 4 or 5 ADR, which is basically, if you look at it on a daily chart, if you've got a 5 down day rally, yeah, that just accumulates and then drops further from there, that's squeezing you. Because normally on a down day, you'd have an up day in the middle of it. Yeah. So yeah, there's not a number of positions. It's the drawdown percentage. I can be in 3 positions, which are 1.5 ADR apart, after the market has moved down by 4 ADR or 5 ADR, and only be in 3 positions. I could also be in 6 positions on the same distance. The percentage drawdown on 6 positions will be way more than 3 positions. So if the market moves a short amount of time very fast, that's a short squeeze, a short time period squeeze, or you can have a long time period squeeze. Pound US dollar squeezed me over months, not by a massive distance. If you remember, if you were here for the pound US dollar squeeze, this squeeze wasn't fast. It was that entire thing. I was stuck in it from here, but it took ages. Like, we were weeks and weeks and weeks where it just ground, and it gave entry after entry after entry after entry because it was going up and down and up and down and up and down, but it was just not getting that profit take move, which is where I got out. So if it had come down parabolic, I would have a lot less entries on it. Therefore, the drawdown would be a lot smaller. Therefore, the squeeze on my account would be smaller. Is what I mean. There is no number. This is kind of why in the bootcamp I'm very woolly, if you like, about how you manage your positions, because there isn't a rule. When you're 4 positions in, you must start doing drawdown. But if I'm 4 positions in and I'm only sitting in 0.32, why would I do drawdown? If I'm in 4 positions and I'm sitting in 3.2, yes, I'm going to do drawdown control. There isn't. You don't work by numbers. You don't work by your lot size. You work by how comfortable are you in this position? Not necessarily also from a percentage drawdown perspective. From I'm in 3.2% of drawdown, but let's look at oil as a good example. If you were in a massive drawdown on oil now, yeah, looking at it, would you do drawdown control now, knowing what we know about where we're approaching? What's the probability, if you're in this long at the moment, of getting that move? High, isn't it? Because look at it. It's really not wanting to go through that level. OPEC have just come out and said they want it above 70. We're below 70. We've got a massive support coming up. If you're in a squeeze on this, now is not the time to get out of that squeeze. Now is the time to scale into that squeeze hard and get yourself out quickly. So again, what you do in a position isn't just about the percentage drawdown, the number of trades you have on. It's about where we are and what you think is going to happen next. We've just pushed down 5 days on the trot. DAX, for example, if you're stuck short in the DAX for any reason, sure you would be, but if you were, is now the time to do aggressive drawdown control? Yes, because it's highly likely this thing is going to collapse at some point, because the market just can't sustain a rally like this forever. It's got to take profit on this move. It's going to pull back. Now I'm looking, right, I'm really going to hit this hard next time. Yes, it might cost me and I might have to do 2 or 3 tries, but now I'm going to hit it because of where it is. It's just extended beyond extended. Yeah, this is not normal. Just not normal at all, is it? When you've got an abnormal thing in the market, there's normally an abnormal thing that follows it. So I can't really answer that question with any accuracy, because I don't think there is a number. It is what it is. DAX just tried to push out again, and we just got slammed again, or we are getting slammed again, potentially, at that level. We're just not going anywhere, are we, today? Again, another 1R sloppy move. Morning, Blue Trader from Pontevedra. Sunny and showers today. I like the weather forecast. I'll get a weather forecast from Spain. It's always good. How's the 750 account going? Oh, I'm not trading that anymore. I just stopped. Yeah, I stopped trading it. Thanks for subscribing, Dennis. Welcome aboard. Just joined Telegram. Never used it before. It's very simple. There's not a lot to it, to be honest. Telegram is super easy. Do you manually take profit on the ORB EA, or do you have any mechanical systems for ORB to take profit? Yeah, there's mechanical. Go and watch the video on it. Up to you. What I do with it doesn't make any difference, does it? It's what I do with it. What you do with it is up to you. It's an EA that trades a strategy or multiple strategies, and it will have mechanical exits based on what you set in the settings. Whether or not you let those trades run to those mechanical exits is entirely up to you. Trading is not black and white. Trading is grey. I got out of this morning. The stock index hedge EA will still be in it if you are not intervening. I have intervened because I don't like the look of it. The stock index hedge EA cannot see what I see because it's not a human being. And it hasn't been trading for 15 years. It's just a mechanical thing. It's told to go long there, set a target there. And if it hedges, it's told to move that target to 5R and wait. As a trader, I'm looking at this going, they're selling the crap out of this at this level, aren't they? It looks like they're selling it again today. Yeah, so I'm out. The ORB EA will be doing the same thing. It's a similar EA. It does a similar thing. But there's lots of set files for it. There's loads of settings. You can set it up to do what you want. Everything I make flexible as possible. Not to confuse people, it does, but I make them complicated for a reason, because there isn't a way to trade with anything. Everything you do in trading is about you and what you see. There isn't something you can put on a chart. I was watching last night, actually. Tom Hugard did an interview with, got his name. Can't remember what his name is. He's a quite a well-known performance coach. Can't remember what the guy's name is. It's going to annoy me. Anyway, I can't remember what his name is. I was just trying to see if I could look it up. But I was watching that seminar yesterday. Steve Ward. There you go. That's it. Do you know what? I used to work for Yellow Pages about 20 odd years ago. And Steve Ward was my manager. I should know that. But he's a performance coach, basically. I was watching the interview with him, and it's really interesting, his insight and how he deals with traders. And everything he said in that interview is kind of a mirror of what I say in here every single day. There is no black and white. Everything will move up and move down. The only way you make money as a trader is by getting in and getting out of the market. And everything you do is based on you. There is no system or strategy. He's got lots of traders in hedge funds and prop funds, prop traders, basically. Proper prop traders, not the online prop crap. Proper people on desks doing this for a living. Yeah. And they're basically all trading the same instruments with completely different strategies, getting the same result, because every time you press the button, it either is going to go up or go down. The reason you press the button has got nothing to do with whether you make money or not. You pressing the button adds your risk into the market. Whether you take that off there or there will depend on whether or not that is a successful trade or not. If every trader that he coaches in a prop firm presses the buy button at exactly the same time every single day, every one of them will have a different result, because there isn't a mechanical system that you can use that knows when to get out of a trade. That is your job. And that is emotion. That is the crowd herd mentality that I was speaking about yesterday afternoon. I was talking about the herd mentality, wasn't I? That Steve Mauro talked about a lot. All an EA does is automate your strategy entry. Your strategy's exit, and whether it makes money or not, is down to how this thing moves after the entry's been made. Which is why yes, there are mechanical exits you can have, but there's also you and your experience. That isn't something that anybody can teach. You have to build that yourself. You have to do that yourself over a period of time. I can teach you 10 strategies that are all profitable. You'll all lose or win with them depending on the button presses after the entry and the exit. Yeah. This was the right decision today. That was the right decision yesterday. The day before, when that thing went up to 5R, that was the wrong decision. Yeah. If this had gone flying up today, that was the wrong decision. What makes that decision right or wrong? The market, not me, the market moving. So if I set a mechanical TP at 2R there, I'd be stupid not to move it down below that area, because we know that the market has bounced there 3 times. Yeah. You can't teach this to a mechanical thing. You've got to make these decisions yourself, which is why you have to be there. EAs are for automating you as much as possible, but not replacing you. You can't replace you. Another thing that came out of that yesterday, which again is something I keep harking on about, you've got to adapt in this industry. He was talking about how traders go through periods where their P&Ls go like that. How do you deal with a losing run? How do you deal with losses? And the first thing is you analyze, why are you making these losses? Are you doing the same thing as you were doing here? Yes. Okay. So you're not doing anything different. What's changed? The market. And I keep talking about the fact that we've come out of a bull calm into a bear volatile. Looks like we're going back into a bull calm market in the stock indices. Are we or aren't we? You cannot trade the same strategy in that market condition as that market condition. Trend trading strategies do not work in ranges. Breakout strategies do not work in ranges. Yeah. If you are a trader that makes all of his money from trend trading, and the market you trade goes into a range, your P&L will drop. Are you doing anything wrong? No, you're just going through a slump. What will happen when that range stops being a range and turns back into a trend is your P&L will start to go back up. It's all about identifying why you're losing money, not changing. And this is why the system hopping thing that I keep going on about everybody doing and why they lose money is because you pick up a system that's a trend trading system, you trade it for a bit and it works. Then it stops working and you go, that's crap, it doesn't work long term. No, it does work long term. It's just the market conditions changed. What you should have done is identified the market conditions changed and moved into a mean reversion strategy. When it breaks out next time, pulls back and tests that and then goes up, change back to your trend trading strategy. Adapt. EAs can't do that. There is no strategy that works in all market conditions. And this is what this guy, Steve Ward, was saying. When somebody comes to them and says, I've had 2 months losing on the trot. Right, what are you doing different? Nothing. Then carry on doing what you're doing. Because the market's not doing what it was doing back then. It will do. Or change your strategy over to a different one. And when you start losing again, go back to the one you used before. Just identification. Yeah. So with everything like the ORBEA, if you set a 2R target on it, today 1R was what you wanted. 2R didn't work. Yeah. Yesterday, 4R is what you wanted when it broke short. But you didn't have it. You had 2R, so you got out there. Don't kick yourself because you got out with a profit. Take the profit, go on to the next thing. Just do the same thing every day, something that's got a long-term edge. That's what we were talking about with, like Ryan was saying, about this guy that's got this mechanical trading system that advertises on YouTube all the time to sell his course. He might have a long-term edge, which is great. But when you buy that course or that system, if the week you start it, it's not working because the trading conditions are wrong, you'll throw that away and go and find another one. The week after, it made 5% profit, but you weren't there because you threw it away because this week it made 3% loss. You've got to trade something over a period of time, which is why I say in the bootcamp, give it at least a month to 6 weeks of trying position trading before you throw it away, because you're going to get into squeezes which are going to last weeks. But when you get out of them, you'll suddenly realize how easy it is to make money in the market. What you're doing is you're not giving the market a chance to pay you, because the market conditions are never going to be right for your system and strategy. You might be trading the wrong instrument. You're trading oil while oil is in a complete collapse. Right, I'm going to stop trading oil. Okay, but then you're going to miss that when it goes the way that your system would have made a load of money. And as long as that pays for that, the system works long term. If you've got 3 systems, 1 trend, 1 breakout, and 1 mean reversion, and you run all of them all the time, one of them is always going to work. If you've got a 2-to-1 risk-reward ratio overall long-term on every single one of those strategies, it's impossible not to make money as a trader. You don't give it the time because your psychology ruins it. It's an interesting interview. If you go and watch it, it's on Tom's Telegram channel. It's on YouTube. It will be on YouTube. I don't think it is yet, but what whoever it was has just said about is there will it take mechanical exits? It will, but that's not going to make you long-term profitable unless you let that play out. So if you take one of the ORB back tests, for example, yeah, this is a long-term edge. It works. So this one is trading the DAX. I don't know whatever setting that is, but that set file is trading the DAX. Look at that and that. That whole period of time there, you didn't make any money. You made money there, and you made money there, and you made money there. There, you didn't make money. If you start trading the ORB EA on that day, you'll have thrown it away within weeks. If you start trading the ORB on that day, you'd never be throwing it away, and you'd still be trading it today because you've done nothing but make money. This is why backtesting is so critical and robustness testing is so critical. You know for a fact you're going to have a period of time where you're not going to make any money. If you haven't got the patience to sit through that, you're never going to make it in any strategy, because every strategy has that period. Why does that period exist? Because the market conditions for this strategy and setting are not conducive to making profit. They are there. The DAX at some point during the year will meet those conditions once or twice. At some point during the year, it won't make those conditions once or twice because market conditions are never the same. Yeah. So you've got to have a different strategy for different market conditions. Diversification. That was a long-winded answer to that question, but it just reminded me of what Steve Ward said. And, it is all about, you are going to get these losing runs. I had a losing month 2 months ago, position trading. I've made it all back and a lot more. But I accepted the losing run and I just carried on doing what I'm doing because I've been doing what I'm doing for years and it works. I know it works. I've proven it over and over again in here every single day of the week. But you pick it up on a losing week, you'll throw it away. It's nothing wrong with the strategy. The market conditions aren't right. If we get into a squeeze, that's not right for position trading. Yeah. That's just what it is. It's not right for position trading. So we deal with that position in a different way to everything else that we just wait to go green and pop it down there. That's the job. You've got to identify that. So go and watch that video if you can. It's in Trader Tom's Telegram group. It's really, really good psychology video. It just explains, he's talking to people that are managing millions and millions and millions of equity. Morning XR update.news. Just looking at my euro pound, I'm down 5 ADR from my initial entry. But then the most, I was only in about 3.5% drawdown on euro pound. Yeah, so I mean, so I got in long there. I got out of that long. Again, that was my decision. You know, your decision, AZ, was not to do that. So you went through that squeeze. I didn't. Same traders, same trade, same setup. One out with a small loss, one in a squeeze. Yeah, both doing the same strategy. That was experience telling me the euro might collapse soon, because fundamentally I was expecting a CPI drop. So I got out because I've got experience of 15 years of watching the market fundamentals move it. That's the only difference. And you can't teach that. I can tell you until I'm blue in the face. Whether you do it or not will make the decision. And how you handle that position after it is what makes you the money or not. And it's pulling back now. So yeah, you should have had an aggressive drawdown control position on in there somewhere, which may or may not have worked. We were talking yesterday about Wyckoff, just while I'm on the subject. Wyckoff Spring. This is absolutely textbook Wyckoff. Absolutely textbook. Fast drop, move into a range. Wyckoff Spring, accumulation break. That is absolutely textbook. If you wanted to screenshot Wyckoff, that is it. Look at that for a Wyckoff. That is just, or Wyckoff, whatever you call it. Yeah. The two main points of a change in direction are the multi-day accumulation, the spring or liquidity run or stop run, or basically the market just trying to go short and the buyers who have stopped that move saying, no, we're going long now, moving up, finding resistance because the guys that have been selling it are trying to push price back down again, and then finding out that there's a winner. The buyers take control and off you go, trending back to the upside. Sorry to change the subject, but I had to point that one out because it's probably the best lesson in Wyckoff. If you wanted a Wyckoff chart to demonstrate Wyckoff theory, that's it. Very good. Anyway, woke to a loss. Russian portfolio bot failed. Oh dear. What's the Russian portfolio bot? I don't think I want to know, do I? Is it that Russian guy that programs EAs and sells courses on how to program EAs? Has he released another product? I live in northwest of Spain. Weather is very similar to that in the south of England. Not all sun. No, I know. So it's important to keep an eye on overall market sentiment and key levels. Yeah. I'm not trading futures. No, not at the moment. I might get back into futures at some point, but I dip in and out of futures. I find it, again, talking about, psychology and things, I find futures difficult to control my emotions with, because you are forced into high stakes moves and you cannot hold overnight. So you've got to trade intraday, and you can't hedge a position and wait for the market because of the FIFO ruling. So it's not really conducive to me as a trader. And again, going on about what that guy was saying, a lot of this journey into becoming profitable as a trader is not about finding the right strategy. It's finding a strategy that you work with and makes sense to you. And it might be walking into the office in the morning, flipping a coin and going, it's a head. I'm going to press the long button all day. That will work as much as everything else, because it's not about why you enter. It's about what you do after the entry. Do you cut your losers short and let your winners run? Yes. That doesn't matter why you press the button, does it? If you do that, you'll become profitable. Why you press the button is irrelevant. You press the button because it hit this level 3 times. So my strategy is on the 4th time I hit the button. It's as good as hitting it on the 3rd time, isn't it? Or it's as good as hitting it on the 2nd time. Or it's as good as waiting for a range breakout to make a new high. I'm going to get in on a 50% retracement. If it doesn't retrace, I don't get in. If it does retrace, I do get in. I put my stop loss down there, so it's miles out of everybody's reach. There's a million ways to get into the market, but when you press the button, what the market does is why you get paid, not why you got in. Yeah, so it's important to keep an eye on afternoon and evening, Franco. Franco's going to bed, everybody. Just to let you know. So it's important to keep an eye on the overall market sentiment, key levels. Yeah. Again, I keep going on about it. The reason I have support, resistance, propulsion on my chart, these lines, is because that's what market moves between. Yeah. This euro pound is an absolute prime example. Price moved down and then it moved up. Then it came back down to the same level and it moved up again. It tried to get through that level again and it moved up again. Tried to get through that level again. It moved up again. Tried to get through that level again and it moved up again. Tried to get through that level again. It moved up again. You don't need me to tell you that price uses support and resistance levels to move up and down. That's what markets are. They are levels of price action. Yeah. This is hitting right now a level of resistance. This low here, we broke through it, tested it, and we confirmed that the guys that sold into that level and then broke through that added to their positions. The guys that are short here are still short. So they're adding into their shorts. Again, this is why support resistance works. It's purely volume of orders at price levels. All it does, it moves from price level to price level until it finds an area of opposite. It's like a magnet. Yeah, you've got a positive and a negative. You've got a buy and a sell. You keep going down until you find more people going up. When there's more people going up than going down, it can't go down anymore. So it goes up. And then it goes up until it finds more people that want to go down. And then it goes down. When I say people, I mean banks and institutions with trillions and trillions of dollars every day to pump into this thing. Out of your control which way it goes. So you just get in when you see what they're doing. Here, the indicator showed you that the buyers are taking control of the market. So get on with board with the buyers until the sellers tell you that they're in control. Then get out and get in with the sellers. Just keep going the way that everybody's going until it gets to a point that looks like it's going to reverse. Support, resistance, propulsion. We hit a level, we sold from it. We got back to that level, we sold from it. We pushed up into that level that we'd sold from previously and we sold from it again. Then we tried to get back to this level again and we sold from it again. Then we got back to this level and we sold from it again. Why are we selling from these levels? Because the banks do not want the price to go above that level. So next time we get back to that level or that level or that level, don't buy it, sell it. If it's moved up aggressively, even more reason to sell it. Yeah, it's all it does. It's very, very simple. And every course and every course and educator that you see anywhere will be selling you something that basically executes the same thing if they know what they're doing. If they don't know what they're doing, they'll probably be doing it psychologically anyway, subconsciously anyway, because that's what the market does. It just moves up and down. So your job is to extract money out of it. And if you put an order into the market to say, take my money if you get to that level, you're not going to make any money out of it because it will just take all your money. New high in the DAX. Yeah. So pushing again up into resistance. So that was the wrong decision today. It's taken an hour to find out, and I couldn't be bothered. So if I'd have stayed in it, that was where I put my TP, wasn't it? So that would have been about $500 with this morning. But too slow for me this morning. It's the risk management for me. Any scenario will play out eventually. Yeah. That's what your account is. Your account is risk. Use it, but don't use it in a way that loses you money all the time. That's the wrong way. Right, I'm going to leave it there. I'll be back this afternoon at 2:20. Watch the news at 1:30. Go watch that video if you can. If you're on Trader Tom's Telegram channel, it's definitely worth a watch. If you're interested in trading psychology, which is, you should be, because it's 90% of your job. So yeah, watch that this afternoon, 1:30, and then we'll have a look at the markets this afternoon, see where we go with the New York session. But I would suspect we're going to have a fairly quiet session because we're waiting for FOMC, which is where it's all going to potentially kick off this evening. And if it doesn't kick off this evening, we need to be aware of tomorrow, which is just 3 interest rates in one day. Busy. It's going to be busy. So yeah, I'll be back this afternoon, 2:20. Tomorrow morning, 7:50, same time for Frankfurt, and then we'll see how we get on later. If you need anything, I'll be in Telegram. Other than that, have a good morning, and I'll see you guys later.